I hear questions a lot about cybersecurity insurance. What is it, and is it something that financial institutions should have?
Well, first of all, you're hanging around with the wrong crowd if you're hearing questions about cybersecurity insurance. But nonetheless, yes, we do get that question a lot, particularly by senior executives of the institution. Let me first of all make it clear that insurance of any kind
Is a scam.
Insurance is an effective risk management technique, but it's a last resort because it's transferring the risk that you cannot mitigate in any other way to a third party. So if at the end of your risk management process you've got your residual pile of risk and you determine this pile's a little bigger than I'm comfortable with because my risk appetite doesn't cover this whole thing. So what do I do with the amount that I have here that I really don't want to accept myself? You offload it, you transfer it, and that's what insurance is about. But again, it's a last resort. So that's number one. Cyber insurance market now has not developed to the point where there's a reasonably well-established loss experience by the insurance companies. And all that's a fancy way of saying they don't know how to price it. And they don't know what to include and what not to include in cyber insurance. It's a very immature market is what I'm saying.
What's an example of not included?
For example, certain activities or activities performed by certain individuals or certain parties may not be covered. For example, most cyber insurance policies won't cover an incident if that incident was substantially caused by a party outside the bank or the credit union. So it could be a third party, which we've already talked about how important third parties are in managing risk and the contractual obligations and all that, and how most incidents, cyber events will affect an institution because they originated outside the institution. Most cyber insurance policies will only cover bank or credit union employees. So if it originates inside with an employee and the employee can be found to be at fault or substantially at fault to cause the incident, then the policy may cover. So that's one broad exclusion. The other may be that the policy may only cover what are considered to be hard costs or financial costs. As we know, cyber incidents don't always manifest, the biggest damages of a cyber event are not always manifested financially. They could be reputation-wise, for example. So unless you're able to quantify a reputation loss, in dollars and cents, an insurance policy is not likely to cover that loss. So there are lots of exclusions and exceptions, and the FFIEC came out with a statement on cyber insurance in April of last year, and they made all these same points. They're saying basically the market is fairly immature. It's basically a buyer beware situation for institutions. Evaluate it closely, reevaluate it on an annual basis, but be careful. Now, one of the things that we're doing to try to really wrap our arms around this whole issue of what's covered and what's not covered is when we conduct incident response tests for individuals, which we conduct. We'll simulate a cyber incident. We'll say this is happening to us now. Let's react in real time, and we'll walk them through all the the containment and control and response and recovery and all the steps, the notification, all the things that the incident response plan says they have to do. And at the end of it, we got a pretty good idea, simulated idea, of what the losses might be for this particular event. We'll then say, okay, we'll assign someone the responsibility to do this. Say, take this simulated loss experience back to your cyber insurance carrier and see if they would, in this simulated environment, if they would cover this, if this were a real event. And that's how we've been able to get most of the really useful information about what is and what isn't covered. A lot of institutions will say, oh yeah, we have cyber insurance coverage because existing errors and omissions policies for directors and officers, they all have E&O coverage. What they'll do is they'll include a small cyber rider in there, which simply says we're going to cover anything that you might do on paper or electronically. Right, so just sort of say and electronically, and they call that a cyber rider. So, and that's all fine. But at the end of the day, you want to know if you have a loss, an actual loss, either quantified financially or in reputation or however you want to quantify it, will that cyber policy cover that loss? And the only way to know that is to bring them a simulated situation and say, hey, we're going to pretend this just happened, right? And this is the net effect, and we're going to have to cover these costs, these hard costs, and these soft costs. What would you cover and what would you not cover?
Have you noticed any evolution of what these policies look like from the insurer's side? Are they becoming more sophisticated and more specific about what their coverage is?
They are, and the more specific they become, the more restrictive they become, right? So obviously, as we get more and more, as the insurance companies get more and more loss experience, what we find is they're tightening the screws on these. So they're saying, we're seeing a lot of fraud in this area. In order to keep the premiums down, we're going to have to exclude some of these elements of these fraud elements, whatever they are. So where they are getting, where they are evolving, so to speak, they're becoming more restrictive, is what we're finding.
When I fly, I like to pretty much just keep to myself, but sometimes you wind up sitting next to a chatty Cathy. And whenever they ask what I do for a living, I like to tell them I sell insurance, because that ends the conversation immediately.
Same thing when you say I'm in compliance.
That's how we survive, Tom.
Absolutely. Works for me.
Tom, it's been my distinct pleasure to have you here today, answering these questions.
Pleasure.
I really appreciate it.
Absolutely. Happy to do it. Blow it up. Blow your fingers off. Here's how you do that. Blow
Okay, you get it. Oh.
Blow your fingers off. There you go.
That's gruesome, Tom. I like it. Okay. Can I get an insurance policy that covers that?